Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein with your metals market video. And this is for, well, it's Thursday, April 5th, 2018. Prices are ready for Friday, the 6th of April. And that's because it's after 5 p.m. Central Daylight Time and the markets have just reopened. What we saw today was gold take a pretty good beating as silver gained on it. So the gold-silver ratio started coming back in the line. It got out yesterday to the highest I've seen it in, I can't give you how many years. It's a long, long amount, and pulled back quite a bit from there. Dollar, as you can see, ended up strong again today. Most currencies just sort of waffling back and forth as they're trying to figure out what to do. In the Brits, they didn't get any good economic data today. It sank the pound back, but we'll see if that holds up in the next few days. In the notes and bonds, you can see how the markets have pulled back a little bit, and you're back around a 282, 283 number on 10-year yield. So the market's now back into the idea that risk-on strategy. It's that fast. You dropped 500 points in the opening minutes of the Dow and other markets yesterday. As the day wore on, market starts coming back, traders piling in, that's it. And remember, you went to the 200-day moving average in those markets and you held it, and that's what probably got the traders going. I have finished my gold report. It's going to be out tonight to my subscribers, so they're the first that will get it, and tomorrow I'll do some other releases. But right now, in looking at gold, I'm going to continue to argue what I've said. The market is fighting to stay over the 18-week moving average of closes, which gives it an upside bias, but barring that, you're just churning back and forth in here. You'll see that on the other charts. I pointed that out in my newsletter too. What I'm not showing here are the charts of the seasonality. And I've done them both for neutral, bull, and bear years, and then I go day by day right on through the rest of the year to give you an idea historically what the markets have often done. If you take a look here, you can see how the break occurred from 1360.90. While you're up $2 right now, you finished at 1228.50. So it wasn't quite a break low, but because you're under the 18-week average, the 18-day average of closes, and with the pattern, lower highs, lower lows that you can clearly see there, I'll just leave it with a down thrust at this point in time. When we look at the chart, this has been a hard market to trade. You've had a zip up, a zip down, and a stall. That's basically what's going on. And when you look at the swing line, in order to get involved on the long side, it all happened up here when you could say, there's my higher high, and I'm continuing through it with the higher low. Couldn't have come in before that. That didn't leave very much room here to play with, and that's been the problem for the metal traders. On the way down, you negated today's trade. You negated the uptrend when you took out this number. You could not afford to take out 1332.70 to keep that uptrend, and today you negated it. So now you have no trend at all. You've got a pattern of a higher high and a lower low. Just a lot of this type of trade. As we look at the 18-day average of closes, the market did get under the 18, which puts the bias of the market down, and it's staying there at this point, even with the market up a little bit. If it extends its break, a possible support target is 1319.60. When we look at the Bollinger Bands, it's lower. It's against the old lows at 1310.40, right in through this area. So we have a pattern in gold that, I hate to say it, you don't have a trend. You're just sort of marching around looking to see what the next thing that's going to do to affect it. Is the market going to get more trade war talk to give it a bounce? Is the market think that, this is all negotiation ploys? Who knows? But you got 60 days, so instead of it being a few, you have to worry about that. What the president did today on NAFTA was interesting. If you were watching the conversation, at first he made it all sound like April 13th, he wants to get his agreement in principle done. And today he said, well, if it doesn't get done, it doesn't get done right away. It's either going to be a deal we want or we're going to walk away from it. I have no idea it's confusing, and I think you're seeing that somewhat in these prices and in stock market. When you take a look at the gold ETF, it stayed in a downtrend now. Now you've got lower highs, lower lows, and you closed under the 18-day average, and momentum is down. Until you take out 127.55, I think the pros are sellers into the 126 area. You've got GDX that also put its swing on with lower highs, lower lows. It was unable to close under the 18-day average of closes, which I guess is a friendly part. Momentum is flat in the market, but basically when you look at these metals, there's really very difficult. Nothing's giving a telltale sign of what to do. Remember what I said about the gold silver. If you take a look at it, you went up to 82.45 on a close. You fell back to 81.23 today, and tonight you're at 81.32 because they're already looking at what the ratios are doing now that we're open. In silver, we made a continued run, broke through yesterday's low, came back, and now the question is, does it get to the 18-day average, and what does it do there? The reality of the situation is, if you look at this low that I'm pointing at, and we'll come to it right here, that low is 16.19.5. Today you get to the 16.15 zone. You're in a downtrend. You have lower highs, lower lows, but it doesn't go anywhere. It just keeps getting hung right at this level, and that's what makes the silver a difficult trade at this point. Momentum, flat, not giving an idea what to do there. The copper market followed through, closed higher over the 18-day average, and it's already a penny lower at this point. This market was one of the tip-offs, and I think I said it yesterday. If you're going to have a trade war, why was copper up? Let's show it right here. Here you're down on the day, and this is Tuesday, Wednesday, down. Today you're back up thinking, okay, copper's good. So let's talk about that. Down 530 points and back up 640. So if you think this isn't a super volatile play, at each point, each of those closes at $2.50 a point gets very expensive. And this market's moving $1,000 at a pop. The trend, back to the upside. Higher lows, higher highs, momentum pointing up, and you're over the 18-day average. The risk is, if you were to buy it at 305.40 and put a stop under the most recent low, that's 290, what is that, 297, the risk is 8 cents, $2,000 a contract. I'm laughing at it because it's so difficult to trade when that happens. As long as you have the embedded reading, you know what I'm going to say. The platinum market, staying in that, still bearish. Lose the reading, and I think you got a shot at a rally back at the 18-day average. It's not letting anybody get short. It's not giving any form of a bounce for that. And your palladium's doing the same. So I'm scratching my head trying to figure out, and I haven't put my hand on it, why is copper okay and platinum and palladium dropping down? I don't have the fundamental reason for it, but these markets have just literally fallen out of bed. Do they know something? Copper doesn't know. Silver can run against gold and have all kinds of reasons, but these plays are a little bit different, and it's quite bearish, actually. In the dollar index, will we turn out of all this sideways action and develop a strong dollar or a weak dollar? Right now, the chart action is betting on the strong dollar. You have a pattern of higher lows, higher highs, bullish. Momentum has been up, well, let's call it bias up because you're over the 18-day average. Momentum is overbought, and now the market, if you take a look, 90.27 is the upper Bollinger Band. You hit 90.27 today. So you're there. You've hit your upside target, and you haven't hit the upper Bollinger Band since the beginning of March, and from there it fell back. Is that going to happen again? Let's assume it doesn't. Let's assume it keeps going. Then 90.76 is the next upside target. But to get there, I think you're going to be hearing people say the dollar has put a bottom in. We'll see if that turns out to be the case or not. So, information. That's what you need in these crazy, crazy times. And you need a lot of it. If you think it's easy, I mean, volumes are busting. We're all busy as can be. But it's all about information, because what's good at 11 o'clock isn't quite good at 12. And if you think I'm kidding, take a look at yesterday's action in stocks, look at the gold, the silver, and you'll see that I'm right.
What's happening right now is the markets are getting interesting plays, but you got to pick your spots very carefully and understand that it all changes every time our president makes a tweet. It's highly unusual that you get this type of volatility off of that. But he says one thing at 11, changes it at noon, and it's the way it goes. In the meantime, if you'd like to get on our information list or our other offers, either call us, go to our website. It's really simple, and you'll see all the free offerings we have. You can click up here or underneath us at any time. It says click here for Ira's free offers. Do so, and we'll take it from there. I'm Ira Epstein. You have a good day.